A stop loss acts as a safety net, a predetermined price level at which you exit a trade to minimize further losses. It's like having a guardrail on a treacherous mountain road, keeping you from falling off the edge. The key is to recognize that losses are an inevitable part of trading. However, by setting a stop loss, you establish a clear exit strategy that ensures you don't hold onto a losing trade for too long. This disciplined approach is essential for risk management and maintaining a healthy trading account. Think of a stop loss as a powerful friend, protecting your capital and allowing you to trade another day. It provides a level of control and peace of mind, even in the face of volatile markets. The first step in setting a stop loss is determining an appropriate level based on your trading strategy and risk tolerance. This requires careful analysis and consideration. Start by assessing the volatility of the market you're trading. Consider its average price range and how quickly it can move. More volatile markets may require wider stop loss levels to account for their potential price fluctuations. Next, think about risk tolerance. How much are you willing to risk on each trade? Setting a stop loss level that aligns with your risk tolerance is crucial for maintaining healthy trading account. Remember, the goal is to protect your capital while allowing your trade some room to breathe. Setting a stop loss too tight may result in premature exits, while setting it too wide may expose you to excessive loss. Additionally, consider key support and resistance levels in the market. These are price levels at which the market has historically shown strong buying or selling pressure. Placing your stop loss just beyond these levels can provide an additional layer of protection. By incorporating these factors into your decision-making process, you can establish well-placed stop loss levels that align with your strategy and risk tolerance. It's important to note that stop loss levels should be determined before entering a trade. Emotional decision-making during a trade can lead to a poor judgment and impulsive actions. Congratulations! You now have a solid foundation for setting stop loss in your day trading endeavors. Remember, trading is all about managing risk, and stop losses are your best friend in achieving that goal. Stay tuned, because we are just getting started on our journey to become more effective and disciplined traders.